Happy Friday. Welcome to the Pulver Report. It's 9 o'clock on the 26th. Let's wrap this week up. Nice to see everybody if you're out there on YouTube, on Periscope, checking out the channel, even everyone on Twitch. Who knows how you're watching this, but hopefully you're all here. YouTube.com/Chris Pulver. Let's kick things off. Risk disclaimer: we understand this risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose, whether you're trading stocks, options, futures, forex, cryptos. You know the deal and the risks. If you're following me out there on social media, make sure you're following the real me, not following scammers, not being asked silly questions that make no sense. Like, hey, you want some crypto? No, that's not me. Real Chris Pulver at most of the social media outlets, and then youtube.com/Chris Pulver. Okay. All right. Happy Friday, everybody. Let's kick things off. Let's take a look at the charts. Currency strength chart. So far for the week, it's been a pretty interesting week, pretty mixed. Big news today. Jackson Hole is underway from yesterday. Jerome Powell speaks at 10 a.m. The markets are sitting right where they closed yesterday with a nice little recovery for the afternoon. Everything finished, I think, in the green yesterday. Let's take a look at the heat map. Pretty sure most was in the green. I think I took a screenshot of it, actually. I did. This is yesterday. So pretty solid day across the board, led by big tech, led by the big concentration, Amazon, Google. Tesla had a flat day, although they did a 3-for-1 split. So for anyone that has Tesla shares, enjoy your 3 times more of it. We had a play this week in equities on demand, about 34 shares, wrapped up with 102 now, and have some covered calls to lower the cost by a few bucks. And I'll sit on Tesla for a little bit. Also, materials doing pretty well, and our energy stocks doing pretty well. So all in all, we're going to have some stocks likely called away today for profit. No complaints. That would include stocks like Alcoa, Halliburton, and I did get a chart alarm on FCX. Let me see if I have FCX out to this week or if it's next week. Wow, big run in FCX. So I have it covered out to next Friday at $33. We're trading pre-market 33.50. Also, we had some big moves in China. China had a big reveal that they're doing another kind of round of lifting animal spirits, if you will, and trying to be accommodative. I think there's 19 measures that are going into effect with another, multi-billion-dollar plan. Let me see what that looks like. I took a picture of it last night. A little StockTwits recap, and let's see here. I thought I took a picture of it. Really? I guess not. Something. It's like 19 measures. Let me see if I can find it in my email. That was StockTwits last night. China. There we go. China released a new plan to support its economy with roughly $146 billion across 19 new measures. That goes kind of hand in hand with the 33 measures that were kicked off when we first had this lift in March and April. So if we're going to see possibly a range or a run back into some bigger pockets, a nicer recovery with a bit of a equities bottom in on some of these Chinese stocks, that would be pretty great. So I'm long on Alibaba. KWeb was another one, another big one that had a nice jump. So for the week, we're trading pre-market 32.15. Wow. And let's see, I've got this one covered out to $33 for next week. And I have this one covered to $30.50. I don't remember if I rolled it up or out. I think I rolled it, saved myself a little bit. Let me check. Let me check my break even on KWeb. KWEB. Right there, break even, covered call. Okay, so it's covered at 33, and 32.44 is the break even, and the other one is low 30s with a break even at 32.50, or a low 30s break even with a covered call at $33. So a few bucks on KWeb. FXI was the other one that's large China tech. That one got called away for $2 a share, and also have some nice credit spread staggered out to the end of the year. So, playing the game. That's all. I mean, does it mean I jump in and chase a bunch of China tech? No. It just means that we were already positioned for this back in March and April, and we stayed the course with some exposure, and we're getting the rewards of that right now, and we'll see how sustained this is. Meanwhile, with the S&P and the U.S. markets, big decisions ahead, right? Coming out of summer trading, which would be officially next week. Next week Wednesday is when August is done, and we get into September. So no more excuses for summer trading. We're going to see where this volatility kicks off. Are we breaking higher in equities? Are we breaking lower? We'll find out. Is Jackson Hole and Jerome Powell speaking today going to be a big factor? I don't know. Over the next couple weeks, we do have some major rate decisions ahead. The Fed is September 21st. We have the ECB, I believe, on the 8th. And the next week, we have the Swiss National Bank, which shouldn't be a big deal necessarily, but it kind of is because it's a neutral, standoffish bank that's been known for a lot of currency intervention the last 10 years, and they're keeping their lips closed and staying pretty quiet on that front, and they have a very strong currency across the board in Forex. So speaking of Forex, let's get into some crosses here, and let me pop in and say hi to everybody. Really quickly, I'd like to ask a favor of everyone that's checking out the video or watching live. Hang on one second. See who's in the house today. Okay, so we have Chris here. Morning, Chris. Morning, Gary. Craig's here. Jason, what's happening? First like. Oh, Jason, first thumbs up for the day. David's here. Willard's here. Good morning, Linda. Andrew, good morning. Mock? Good morning. Joseph, what's happening? Sterling's here. Everett's here. Peter, good morning. Brad in the house. Daniel's here. Steve is here. All right, John, what's happening, dude? How are you? Walt's in the house. A question and favor to ask of everyone. I'll post it in the chat. There is a channel right here that I'm going to start being a part of and contributing to. This is the hedge fund that I work for, Beyond Capital Group. So we're just getting started. It's going to be myself and the other portfolio manager, Jared Johnson. We're going to start doing, interviews, market snapshots, just above and beyond, just more good content for everyone. And if you would do me a huge favor, if you click on that link that I just posted in the chat and subscribe to this channel, obviously if you're loyal to come into my Mondays and Friday sessions, that's awesome. I'm still going to do those. That's not going to change. And we're going to continue to see my channel grow, but I'd like this to grow as well. So if you would kindly come in, subscribe, and click that notification bell, because when we go live or we do video snapshots or market snapshots or interviews, anything we have content-wise, it's going to be good stuff. All stuff about the markets, all stuff about what we're doing, what we're trading, and how we're navigating the current times. Good stuff. Cool. All right, I appreciate that, and I can share that again at the end. All right, let's get into the dollar index. We did not, even though we had 5 or 6 candles in a row to the upside, we did not break the highs. And therefore, what are we doing on the dollar? Well, as we come out of summer trading and we're in a fifth wave here, I did say this week in the Flex Trading Room that perhaps, if we go to the weekly time frame, it'd be the DXY, so we have some more history to pull from. We have some big indecision candles. Check out this weekly candle. Now, again, the day is not done. The week is not done. We'll know more today at 5 p.m., but that's a pretty nice looking rejection candle, if I do say so myself. And if we have a high, and we have a center low, is it possible that, one, the dollar comes back down into that same low again for a little bit more consolidation? Is it possible that we might even break the low briefly to come in and fulfill a measured double top, come back into past resistance, and then see if this dollar is going to get some bid and find some support and then continue its supposed dominance? I mean, one thing that struck me this week is just taking a look at this trend. This goes back to January of 2021. That's an 18-month trend, everybody. Now, understand that, yes, we had January here. We pulled back here in May, okay? But from May to August, that's a solid 15-month trend, right? It's crazy. So it's been one of the longer, I'm not going to say unsustainable, but one of the longer, more irrational trends, especially when it comes to typical wave counts, what the market does in the higher time frames, how this thing rebalances. And, technically speaking, I'm looking for the DXY to come back and find some support right around this 200 EMA, at least back to this 200 EMA. But I told traders this week that if for whatever reason, let's say that Jackson Hole today and going into next week and getting into September, premeditating the Fed rate decision September 21st, let's say the market just blows the top off this dollar stuff once again. Well, we come back into this 2002 pocket and this crazy resistance level back in 2001, 2002 highs. And if we stretch that high with no pullback, all I think we're doing is setting up for a much needed, ridiculously overextended fall. Right now, I don't know if we're going to see that happen, but I would say this: if things get really bad, right? If things are really bad, all of a sudden there's worse news in Russia, Ukraine. There's worse news in China and Taiwan. There's worse news coming in the U.S. And there's like, oh my gosh, retail is down and everything's down and blah 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 blah. Okay, I get it. It can get worse, right? And equity starts to fall with it. I've said for the last probably 3-4 weeks, if equities is going down, I expect to see a stronger dollar. If equities is going down, expect Bitcoin to be vulnerable to the downside. But if this flips, where equities are going up and Bitcoin is stable and continuing to push towards 28 to 30,000 and the dollar takes the hit, I think the dollar weakness is what's going to lead to a higher stock market to finish out the year. And we've looked back at examples in 1962, 1970, 1974, into the 90s. We found some correlations with peak inflation or CPI data. We found some peak interest rates. And it's all about anticipation, right? If the market expects the Fed to be at 3.5% or 3.75 by the end of the year, did they properly price that in so they can move past it? The ECB, has the market priced in another 50 to 75 basis points in the ECB if they raise rates in September? I don't know. We haven't seen a lot of euro strength recently, right? So anyway, there's a lot to navigate here on the dollar, and there is a lot riding on it. The dollar index is going to affect a ton of currencies in the Forex market. The dollar index, in my opinion, is going to also affect the entire equities market because that correlation is pretty firm. Weaker dollar, stronger equities, or vice versa. Okay? And yes, that's right. Next Friday, there will be a non-farm payroll announcement too. Yep. So we'll have job report on Friday the 2nd. And like I said, ECB that following week, and the Swiss National Bank the week after that. We're going to have all the central banks lined up for September. The Fed is on September 21st. Jerome Powell's again speaking this morning. I will be watching this tool. If anybody's interested in checking this out, this is a CME group. This is a Fed watch tool. And let's see if anything's changing for September. It's getting closer and closer to 50-50, right? So we've seen this. I think this week, in fact, it was as high as 60% on the 75 basis point side and 60-40. Now we're back to 52-47 or 52.5, 47.5. So the market's a little bit torn. And honestly, I don't think the September rate decision is that critical. I think it's more so what they say about the next 3 months. If they raise rates by 50 basis points, are they going to stay more aggressive through November, December? Or if they raise by 75 basis points, are they getting softer and going to reduce the dramatic trend of how aggressive they're raising rates? This week, the Fed speakers were giving some mixed signals. We saw, I don't know if it was Bostic was one, but the U.S. could operate at 4% interest rate. It's like, could they? Do they want to? Because the market has already anticipated 3.5 to 3.75. You can see this is the majority right now. But is the market prepared? Is equities prepared for a higher target rate from the Fed? And going into February of next year, are they going to raise rates? You can see that there's really no change from where we expect the market to be or the Fed to be in December to where they expect the Fed to be in February. So there could be a brief pause, or maybe the Fed's like, okay, we'll do 25 basis points. Okay, we'll do 25 more. But if you go out to July, you're sitting at the same probability for right now. So in a way, the market is pricing in 3.5, 3.75, maybe a top of 4% for the U.S. central bank. And from there, I'm sure that the Fed is begging and pleading with inflation data to improve so things get back to normal. Because if that's not the case, then we're going to be in this really sticky situation of dependent Fed, month-to-month data, what the Fed says, what the market's going to do and react to, and everything's going to feel super uncertain and very vulnerable. But guess what? We still get to trade it. So what are you going to do? Okay. Will I move your YouTube time to 8 or 8:30 Eastern next Friday to align with non-farm? I'll probably just keep it at 9 o'clock so it's right around the news. 8:30, there's usually 10 to 15 minutes of noise, so I'm not looking to jump right in. But how about this? How about we do, I'll just make next Friday's session, I'll just label it as a non-farm session. We'll start it at 8:30. We'll just come and do it right when the news starts. Is that fair? So we'll do a Monday normal session at 9 a.m. and then we'll do a non-farm session Friday on the 2nd. Cool. All right. For that, thumbs up on the YouTube channel. All right. So DXY dollar index, let's go. Currency wise, I did see that the euro is getting some strength today. Not going to complain. Dollar's getting some weakness today. Not going to complain. We're getting a nice little run on the euro dollar. It's up to 1.0034. So we're back above parity for the first time in a couple of days. There's a nice little pocket back up around 1.01. I'd like to see if we can get another pop to the upside. I'm kind of looking for one. So what I don't love is watching this silly little Swiss franc getting stronger. So the JPY is off the lows. The dollar's getting softer. I'm surprised that the Aussie New Zealand haven't moved much. The CAD is still a bit softer. It's just a big flow in the euro today. So anyway, we'll see. And again, based on this, look, there is a strong correlation between the euro dollar and the DXY and the US dollar. So if we are going to see some dollar weakness, again, I've said this and everyone in the flex room knows this. My target for any dollar correction right now is back down to a 200 exponential moving average on a daily time frame. It's a high bar count. It's overextended. It's a fifth wave move. It is probable, based on technicals, to have at least a three-wave correction. Now, does it get more complicated if we have a double top? Well, yeah, if it's a double top, perhaps it comes all the way down here, breaks the lows, and goes all the way down here through the 200, and then we get that support to come in later. So all I'm really looking for is a healthy correction, okay? Now, that being said, we could also do this. We could go sideways on the dollar, and this EMA just catches up over the next couple of months. Maybe that's the play. And I just need to be mindful of if it's at support, am I in profit? Because if it's not at my 200 EMA and it pops back up here, if I can get some profit or protect some profit, I will. But my target is to try to hit that 200 EMA and see what this price action does. Okay, so that's where our currency strength lies today. Everything else is pretty quiet. Not a ton of volatility, 50 and 35, so pretty quiet on the vertical axis. But there's going to be some movement today, and I'm sure that Powell's comments at 10 o'clock. You can look at this website, financialjuice.com, and just see what's happening. Maybe any breaking news, any comments, anything that pops in higher here. So we have Tokyo CPI slightly higher, 2.7 forecast, 2.9 actual, 2.5 forecast, 2.6 actual. So slightly higher CPI coming out of Japan. Does that mean the BOJ is going to change their tone? I don't know. Obviously, we'd like to see some rebalancing technically on the JPYs after a 3,000 pip trend on the dollar yen, right? From just above parity at 100, 103, all the way up to nearly 140. That's crazy, right? So it's been a wild year. Forex has been high volatility, pretty irrational trends, and I think this is a really good year to see truly how efficient the Forex market is, because we have seen a lot of imbalance. And if the market's willing to find balance or find equilibrium or find those reversions, great. That's what the Forex market tends to do. So it's just probably taking a little bit longer, making a lot of retail traders nervous, and kind of playing with our strategic emotions, if you will. So anyway, all right, let's take a quick run through the currencies, and I'm going to get in some stocks. I've got some notes that I want to just double check really quickly. So Aussie CAD, I'm long. So far looking better and better. If this is a head and shoulders pattern, watching for this level here to get broken. If we break this high, I'm probably going to start taking some profit between 92 and 93. I would like to hang on to it if we get to 94, 94.50. So I've had some long positions in here. They're in profit. I'm looking to break these highs, start looking to see where I can protect my profit above 92. But I'm long on the Aussie CAD. I'm also holding long on Aussie Swiss. We're going to see if this is going to have one more flush lower. If this high to low is this a little bit of a correction like so. If it is, then perhaps there's one more leg lower in the Aussie Swiss. Or it comes back to this pocket level. So maybe we have a slightly bigger extension to the upside, come into this pocket area around 68.50, then we drop. There's also some left structure over here around 6,900. So if we can come up to 68.50 to 6,900, I'm going to protect my Aussie Swiss long profit and then possibly look for a sell trade. But I say possibly because honestly, if I could just buy this one lower and have a positive rollover trade, I'd rather do that. The AJU JPY, just kidding, the Aussie yen. We're trading at 95.59. We are flirting back to these previous highs. This is the high from June, 97, nearly 97. So can we get up another 100 pips and try to challenge this? I'll change this to a 4. If we challenge this high, this is a rising wedge formation where we might come back and test this high. So could we push up enough to get to slightly higher highs? Yes, very possible. I am long in the Aussie yen, and if I protect those profits, I would be looking to then anticipate a bigger short position coming. Now, to do that, I would just draw a trend line here and wait for confirmation. But for right now, I'm going to hold my long positions to the upside. Okay. Aussie New Zealand, we're trading at 112.42. Ah, fudge. Well, I can take a 90 pip loss, which I mean, yesterday's close was 111.95. I wasn't up overnight, so that's where I'm getting the extra 40, 50 pips to my risk. So a couple things I can do on this. Flex traders, we took a trade at 111.50 and we shorted. 1300 to 1400 is really tight resistance here in the near term. There's also some symmetry. Take a look at this. So if we go from this low to high, and we go to this higher low to higher high, couple things I could do. I have a trade at 111.50. We have symmetry that's creeping up here towards 1300. So I can either, one, take a loss on this trade for 90 pips, or two, I can just trade it again at 1300. And what I'm going to look for is if this 1300 level holds, okay, I have a trade in at 1150, a trade in at 1300. If this comes back into break even or better, then, past resistance here, maybe this is more of a range trade where we have big resistance and we have big support. Okay, so if we find resistance and settle back down, maybe this comes all the way back down to the lows again. And this continues to be this, 7-year range. So I think what I'll do, and we'll talk about this more next week in Flex, is I'll probably just look at a position around 1300, sell it, and then just assess the 113.50 to 114 level for a potential stop out, just in case, because again, if this is a big low and a big low, and this is a center high, if this thing starts to go crazy up here, and I don't necessarily know why the Aussie would really outshine the New Zealand like this, especially when they're both raising rates and they're both, heavy commodity-based currencies and their heavy trading partner was China. But I'm just recognizing that if it gets overly aggressive to the upside and we start closing above these levels, it's probably not the best trade for me to be holding short. So it's really, the line in the sand is around 13 to 13.50. If we go higher than that, I really shouldn't be holding this thing long. Or I'm sorry, holding it short. So like I said, we'll talk about that more next week in Flex, but there's a little push to the upside on Aussie New Zealand. Aussie dollar, I'm going to still hold long and look to get long around 6,700 if that one fills. I'm just waiting for right now. CAD Swiss, holding long in this one as well, trying to get back to 76 and 77. CAD Yen, a little bit indecision, but watch for some overextended conditions. If we come back up to these highs, another rising wedge type formation, something like this. If we have a high, we have a high. If we have a slightly higher high, great. Good point for the bulls, but then a correction likely coming back into this 200 EMA, find some support and see if this wants to consolidate. Or, this structure ends up breaking back down for a correction. Okay. So I keep telling traders, if you're following these JPY crosses, just follow your alignments. If it stays bullish and it hasn't broken this trend line yet, then don't sell it. So right here. If that trend line doesn't break, then we have no business selling it. Right? So you can stay bullish, eliminate your risk, protect your profits, put in a trailing stop loss. If it breaks that trend line, we'll likely come back down and rebalance. Swiss yen, still sideways, but looking to see if we can form a top up here and have a long ways to drop towards 128. Euro Aussie's been choppy, but still pushing a little bit lower. Aussie Swiss has been pushing higher, so those are inversely correlated. If I'm a buyer on the Euro Aussie, I'm looking to buy this thing at 138 or 137. If we somehow, hold this low over the next week or two, we might be putting in a near-term bottom. We could look at a little swing trade to have a high to low and then a correction right in here where we're going to form a larger range. But as we get into September trading, I'm not really looking for ranges necessarily. So it almost seems like if we can buy it low and this trends to the upside, it's a nice risk-reward trade. Reward to risk trade, rather, right? Okay. EuroCAD, we broke the lows, but if we get back above 3,000, perhaps this area holds. There is a decent bar count in this one. If we can push back to this 3,200 level, consolidate, we might have some follow through for a bit of reversal coming on the euro, right? The euro is in decent shape to look for some strength. I mean, the euro Swiss has been ridiculous. We're trading out 96.43. Can we start to get on the right-hand side of this trend line? I certainly hope so. Okay. Can we start breaking some highs? Can we start taking out some previous highs at 97, 97.50? I hope so. Chart alarms are set. Let's find out. Euro pound, nothing exciting there. Euro yen, Bullish on the day. This could be setting up a larger head and shoulders pattern, like so. Left shoulder, head to neckline. Right shoulder might come back into the same symmetry around 140. So if we come back into 140, that's fine. Look for that area, but I would also be looking for a sell opportunity at 140. Euro New Zealand, similar to the Euro Aussie. I'm going to watch this one pretty closely. We didn't come down to support where we wanted to buy it at 56, so we're stuck in the middle. Okay, I'm not convinced in this one outside of we have a big swing high and low. We had a lower high and a higher low. So we doing something like this? Maybe. Maybe we have some type of range, right? Some larger pennant on the Euro New Zealand, but we'll talk about that more next week. Euro dollar, like we said, back above parity. Plenty of upside potential. We've got a pocket back around 101, 101.20. It'd be nice to see if we can get there today. I mean, I've just watched this thing bump up in the last. Yep, we're getting some covering there, about 25 pips in the last 20 minutes or so. Man, all I got was one extra trade on there for FIFO or non-FIFO. See. Taking a look at the 1 minute chart. This thing's cranking up here on the 1 minute right before the open. Let me look for a little bit of a pullback here. Anything that I can see that would prevent me from wanting to jump out for a second? Not really. 5 minute chart, can we get a pullback here? 1.0040 perhaps. I've got a trade in around parity at 99.95. I think we just have it. Let me go down to a smaller time frame. I just think we have a decent little pocket cover on this 4 hour time frame. It's pretty easy to see. Something right in here. So a couple things we're going after. We have a nice little pocket candle right there. We also have a weekly pivot right around 1.0120. So, again, it's obviously dollar trend. Maybe it prevails, but I think if we're going to start making a recovery and have a dollar correction, the euro dollar squeezes up here, finds that pocket, starts rallying up to challenge this high at 1.03. If we have a 3-wave correction, there's a low that's lower than this one. So wave 1, wave 2, wave 3, we've already looked at this 106 to 108 level as a bigger correction on the dollar. So, anywho, let me see here. $28. I'm just tempted to put in a little buy trade. I've already got one in a parity, like I said. I've got some trades lower, just in case at 97.50 and 95 and 92.50. But I'm just looking to see if I can get a little bit more aggressive towards that 10100 level. It's about 42 pips higher. Raising barriers by 75 basis points next month. I mean, that would be awesome. I know that the market was probably looking somewhere between that 50 and 75 basis points rate hike. So that's fine. That's totally fine. And looks like the ECB, I mean, there's a pretty nice squeeze going on today. Weekly pivot around 1.01. That's another 40 to 50 pips higher. So far for the day, lows around 9. It's already up 100 pips on the day. Not saying it can't stretch a little bit higher, but I mean, I'm kind of already out of it, right? Facebook, FXIs above the sell call level. Bob is up on 103. Okay, those are all good signs. Chart alarm's going off on stocks. Wall Street's officially open. You punk. I'm trying to get a pullback entry on euro dollar if I can get it. All right, I'm going to put in a trade at 1.0030. 1.0030. 1.0030. Actually 33. 1.0033. So right here, I'm just going to look for a little pullback if I can get it with some volatility. So right here, previous resistance, right at this little push for the 9 o'clock candle. If it pulls back to it, try to get a little stack trade. I'm in this one already with an active position just below parity, looking for something right in here. That's the pocket that I already highlighted to trade back to. There can be some non-FIFO trading, or I try to get that bigger squeeze to the upside, looking at that daily bar count. So I'll keep an eye on it. If it runs without me, I might take some profit off that parity move for 120 pips or so, and just try to get back in and get repositioned. So believe me, on the daily time frame, there's still plenty of room to the upside based on this bar count. So I'm kind of getting into the weeds here, but if we end up pushing back up to, this is 107, 107.50. So there's still plenty of recovery room, but we have to clearly get above this 50 EMA. We get above this 50, then we're looking at a 1, 2, 3, right? And there might be some trades to enter back in here if we have a little structure like a crown or head and shoulders. So we'll see what it does. Okay. Top of the hour should be Jackson Hole with Powell speaking at 10. And it's Friday, so things would be a little crazy. All right, moving on. Pound Aussie. Pound Aussie's been selling lower. Told traders once we start making lower highs, look to fade this move. So we have any pullbacks, look for counter trendline breaks. There's firm resistance here around 72. Right here. Horizontal ray, 72. So if we hit that level and it keeps making lower highs, I'm looking at that as like one of those little subtle summer breakouts. So we break, pull back, we break, we pull back, we start to slide lower. Then we have a trend line that puts us down into lower highs and lower lows. Pound Canadian. Pound Canadian off the lows around 53. I am currently long trying to get this bad boy back to 6,000. So if we look at a higher time frame, we're coming back into some major lows. Oversold conditions on a weekly time frame, which is rare. Okay, we saw it over here back in 2016, massive bottom. We're seeing it right now. Hopefully there's a massive bottom. And if we go any lower, I am positioning for this area to hold and looking for, even if it's this, we hold in here, we come back and range trade. That's still a 1,500 pip range. So if we can find a low and shoot back to 1.60 or 1.65, I am all about it. All right. So I'm holding my positions. Again, small positions on pound CAD, but still willing to kind of build that overall area. Pound Swiss, we're trading at 114. A little bullish candle on the day, bullish candle on the week, but we have to make some strides back to 117. Pound yen. Pound yen, if we come back up towards I think it's 168 is where I want to sell it. Take a look over here. Let me go to the daily time frame. I think if we come back to 168. Yep, something like this. So in here, if we can come back into that high, I'm looking to sell the pound yen. Otherwise, we have a little bit of indecision that we're just kind of monitoring it out. If it breaks and closes lower, you can chase that. Again, I don't condone chasing, but you can go to smaller time frames and look for those alignments to sell. Okay. All right, that's pound yen. Pound New Zealand. No trade on that one for right now. Pound dollar. Are we recovering off the lows a little bit? Hopefully. I'm currently break even at around 20.50 on the pound US dollar, and I'm trying to get back towards 24.50 or 26. Another one, decent bar count, lots of good pockets back here. Previous highs at 23, previous highs at 24, and this kind of falling wedge formation at 26. So I'm going to sit tight and see if this will ultimately break this structure here. Little three-wave correction, see how high it goes. Pocket, pocket. That'd be a nice little profit on a corrective dollar. New Zealand CAD. I'm still going to hold long. I already took profit on this one when we had this peak around 82.50. I had some pullback, so I got back in. New Zealand Swiss, we're holding long at 59.30. We had a reload trade. We already took 100 pips, and we're reloaded, and it hasn't hit my chart alarms yet. So I'm going to try to get this one back to 60.30 or higher to take some profit. New Zealand Yen, waiting for resistance around 86.50 to 8700 before I sell it. New Zealand dollar, holding some small long positions and just going to stay long on New Zealand dollar for a little correction. Dollar CAD took some profit this week off of sold it at 30.20, took 100 pips, and I still want to take a trade if I can get a setup. Want to sell it here, want to buy it here. I'm not trading it right now. I got filled on a swing trade. I just took the profit because I didn't like the area. It was a level trade that I just wanted to get off for profit. So it was fine. Grab 100 pips and nobody's going to complain. But if I'm down here at these lows, I'd rather buy that structure. If it's up here at these highs, I'd rather sell that structure. Right now, it's stuck in between. Dollar Swiss. I'm like forever long on the dollar Swiss, and we're going to see what this one's made of. If the dollar Swiss drops back down here, that should do well for the euro dollar. Dollar Swiss dips, euro dollar should rally, so we can look at some relief on the euro dollar, look at some at adding and building some more positions on dollar Swiss. I'm still going to hold long dollar Swiss. There's very little that's going to change my outlook on that one. Dollar yen, obviously I'd love to see a stronger yen, a weaker dollar. Big bar count, nearly 400 bars now in the daily time frame, which is a ton, and we potentially have a crown pattern right here. So is this a crown pattern? If so, we could have a right tip forming, and we look for some symmetry there. We could also look for our fibs, but if this is going to be a double top, which we talked about this week in Flex, if we have a high, we have a high, we just have a range trade, we come back down to this low. If we break that level, that's how we hit this 200 and possibly lower. You know, what's crazy is all this, you know, crazy unsustainable trend, irrational trend. If it ends up rebalancing, guess what? You've got this 3,600 pip trend, right, from 103 to 140. If this just comes back like 1,000 pips, that's a 33% retracement, right? So, I mean, it would make sense to go from 140 back to 130, okay, which we already did here. That was our, you know, retracement. But is there going to be a structure off of that where we have our high to low, lower high to lower low? If that's what we get, great. Let's make sure we're protecting profit in this area. If it goes lower, that's why we have trailing stop losses. I will be trapping profits aggressively into this 128 low. If it wants to go even lower than that, there's plenty of pockets to trade back to, pivots to trade back to, but I just don't know how, you know, sustainable that's going to be to the downside. So if we're in profit, let's make sure we protect it. Okay. Climbing fast in the euro strength. I mean, good. It looks like a little bit of a squeeze going on, right? Yep, we're at 10060 right now in the euro dollar. I'm going to see if I get filled on that buy trade at 1.0033. Again, I can't just put in big trade sizes. We're still, I mean, look, keep it really simple, right? Has the euro dollar broken a trend? Look, has it broken this recent trend? Yes or no? Have we broken that trend line? Yes or no? No. So as much as I want to see this thing get super aggressive and it's back to parity, I mean, all that's exciting. But the real move, the bigger move to me is this 200 EMA is going to be visibly traded once we get above this 50 EMA. So that space is where I choose to be aggressive, right? So right now it's like I could be aggressive on a little scalp, but I probably have to pay closer attention to it because we're still on the left-hand side of the trend line. But we break that trend line, this area from the 50 to the 200, that's when we can start to see this thing really sing and scoop. And if it does, then I can stack up some buy stop orders and I can take that trade and hopefully get that thing to pay out nicely for, you know, a couple hundred pips. But just in case this is like a little relief rally for a Friday and then it comes back down for next week, I don't know, right? Left side of the trend line, right side of the trend line, that's where more confirmation is needed. We get that. We look at that in the dollar index. We see the correlations. Then we can justify getting in for some more trades and adding positions. So I just got to stay disciplined, got to stay patient, and continue to monitor my risk. All right. Stock wise, really quickly, just let me look at my notes right in here. So Alcoa, Tesla, American Eagle, some of these 9-2 expirations for next week. I rolled FCX. HIMS out to the monthly, K-Web out to next week, NCLH we rolled as well out to 9/16. We have some credit spreads expiring over the next month or two. Pulte Homes out to October, Halliburton rolled it out. Okay, so this is what we'll review at the top of the hour for equities on demand. I'm planning on losing some stocks today for profit. Alcoa, I've got another 500 shares. Man, it's up to 57. I think I rolled this to. I'm gonna lose it at 52.50, which is fine. I could roll it another week and make like 30, 40 cents. I'll look at that again today just to make sure I'm not missing anything since we're way above my cover call level. But the reality is, you know, I'm still grabbing an extra $1.50 a profit because last week only half my stock was called away at $51. So the other half at 52.50 is fine. But yeah, I'm just gonna keep it. If it gets called away, great. That's a nice chunk of profit. That'll be like 10 grand the last couple weeks on Alcoa. HAL, Halliburton. This one, if I get it called away, this was around 30. What do we do here? 826. So I have the $30 call with a break even at 27.81. We have credit spreads out through the rest of the year as well. Take a look at this. If you're in Halliburton, BKR, so HAL, BKR, SLB, CTRA, if you're in, I mean, even like ExxonMobil, some big energy. There's some big energy pushes here. Look at XLE, the actual energy sector play. This thing is going to the upside. And honestly, at this trajectory, we might have a little hesitation, but we're probably heading back up towards these highs around 92.50. If we get to these highs on XLE, let's make sure that we are trapping, protecting our profits on those energy related stocks. We could have a range here, okay, where we get up to these highs, form resistance, and we start to fade back down into those mid-September expirations for options. We start fading this back down. But if you're, we started to get aggressively long in here with a lot of stocks, and energy happened to be one of those winners. So that's a good thing. But our credit spreads are looking good. Our stocks and our calls are looking good, and just be mindful of where this is headed. So good stuff. Okay, how about gold? Yeah, I'll take a look at gold and silver. Look, if the dollar's getting weaker, gold should rally. It's pretty simple. I mean, if the dollar's getting softer, then gold should be up. If the dollar's getting softer, then silver should be up. So it's a pretty simple play. And again, I said the dollar's going to affect a lot of things. It'll affect Forex. It'll affect equities, commodities, gold, silver, oil. I mean, the dollar is a major, major story this year that is influencing pretty much everything. So I'm not saying that's a great thing if you're on the wrong side of it, because it's been an 18-month trend on the dollar that's probably making a lot of pain for traders, or creating a lot of pain for traders. But it's overdue for corrections. I mean, monthly, weekly, daily timeframes, overbought, oversold conditions, bar counts like crazy. Look, I know trends can last longer. I know there's the saying from John Maynard Keynes: the market can remain irrational longer than you can remain solvent. That's why I've taken losses this year. That's why I've taken off some of my exposure to lighten my position just in case. But technically, I still believe in efficiencies, especially when it comes to trading currencies. So traders in the flex room know the thing, right? I washed away some profits this year to reposition and stay in the game and fight the good fight, and see how I can turn these into profits. Okay. Newmont. What is that one? What's Newmont? Oops, that's not what I wanted to do. Yep, we'll take a look at Bitcoin too. Yep. So Newmont. Are you looking at this one? NEM? Craig, you looking at Newmont right here? Oh, you're looking at gold. Well, what's the ticker, dude? This is it, NEM. So, yeah, I don't know. I don't. So I've said this the last like month or so. Gold, I'd rather trade GLD, because mining is in a very different place. I mean, I don't know if you want. Look, if you look at this chart, I see a correlation with this chart and the dollar, right? I mean, when the dollar topped, we saw a big rally in gold. So I'd rather trade the correlation of GLD to get that trade and do some credit spreads, which we have. We have some credit spreads on GLD. 160, we're trading at 163. So if we stay where we're at, we'll be good on these trades. But miners, like I have AUI, I think that's Yamana Gold. We're trading at 493. I've got it covered to, I don't recall if this is 450 or $5, but I have my AUI credit spread. Actually, we might have to look at this today for expiration. We have an expiration, I think, today. It's going to be profitable. I'll probably just take profit. It's a 5 by 450. We're not going to take full credit on it. It's probably not going to rally 7+ cents on the day. I might just take the profit because we're closer to that high side, and so instead of making 25 cents in the trade, we'll make maybe 20 cents. That's fine. I'll just take the profit and not worry about it. I don't want to get assigned on Yamana Gold. There's other stocks I want to be assigned and keep that cash at the ready. So I kind of don't love mining stocks. I like the correlation of play the dollar, play gold, do a lot of credit spreads. I'm not trying to buy a bunch of mining stocks. So that's my 2 cents at least. But anyway, all right, traders, I'm going to take a little breather for the top of the hour. One last thing. So everyone watching today, if you do me a favor, click that thumbs up button to support the Chris Pulver channel. And I'll put this one more time in the chat. So what we need to see here is with the Beyond Capital Group, myself, Jared Johnson, we're going to be portfolio managers for the hedge fund. And take a look. We can't officially say it's youtube.com/Beyond Capital because we need more subscribers, but we're just getting off the ground and we're excited about this. It's been 2 years in the making to get this hedge fund up and running and fully compliant. And man, that is a pain in the butt. And we've been open since March. So open, accepting capital, all that good stuff. But we're going to have some fun with the outlet of, talking to people in the industry, using our, expertise and resources for market snapshots and content to deliver to, traders like yourself and kind of bring Wall Street to Main Street. Okay, but if you would do me a favor, click on that link and check out the group page and subscribe. You're going to start seeing more content dripping in every single week. And again, for me, Mondays and Fridays keeps it consistent. I love being here for the outlooks and the recaps. And next Friday, we'll do a non-farm payroll session, so look for that next week at 8:30. Right? All right, traders, I'll let you go. Happy Friday. Have a great weekend, and I'll see you back here, same time, same place, youtube.com/Chris Pulver for a weekly outlook. Okay, all right, buddy. Have a great weekend. Equities on Demand students, I'll see you at the top of the hour. Talk to you soon. Bye.